Hi, this is Ray Evans. Happy Thanksgiving 2021. It's been a heck of a 1 and 2 year time period, and I know we all relish getting together with family, and certainly that's the case this year. Going to have a quick conversation with you today regarding inflation and potentially investment wise, something to be aware of that we think is probably attractively priced moving forward, and that we are recommending that clients have a bigger allocation towards. So, just to recap a little bit, and these numbers are staggering to me. The US government has been obviously printing huge amounts of new money over the past 18 months. If you go back to January 2020, the Federal Reserve had about $4 trillion. You go to springtime 2021, that number increased to $6.7 trillion. So if you think about that, we've had, of all the US dollars in circulation, about 40% of the US dollars in circulation have been printed in the last year and a half. So that's literally the definition of inflation. There's just more money that's been printed, there's more money in circulation. And what that tends to do is ultimately devalue your own currency. And that's the case right now, or is starting to be the case with the US dollar. And I think it's always interesting to draw back to this chart that shows US as measured in the Standard & Poor's 500 stock performance versus the EFI, or Euro Australasia index, over the last several years. This actually goes back 50 years. The gray periods are periods where the S&P 500 outperformed the EFI. And the purple mountain charts are where the EFI has outperformed the US. And if you'll notice, just going backwards over the last 14 years, the S&P 500 has outperformed the EFI by 260%, a dramatic outperformance number. And almost every portfolio US assets have outperformed non-US assets. Well, now the dollar is likely to get weaker as we printed all this money. And if you've noticed in your 401k balances or your own portfolios, your international assets are starting to perform extremely well. Much cheaper valuations versus US assets. So we are in general recommending a higher allocation to stocks once we measure people's risk tolerance. So I just want to bring that to people's attention. It'll be something that garners more attention as we get into 2022 and as we get into, right around the corner, midterm elections. If you'd like a copy of this graph and maybe a report that we put out regarding the value of international or non-US investments versus US right now, please contact me, ray.evans@pegasuskc.com, and we'll get that in your hands. Thanks very much. Happy Thanksgiving. Look forward to talking soon. See ya.